Imagine walking into your local coffee shop, you order your favorite drink, you pull out a $5 bill, and you hand it over to the barista.
Yeah, just a standard morning routine.
Right. But before they can even touch the money, a guy in a gray suit suddenly steps between the two of you.
Uh-oh.
He grabs your $5. He says he needs to hold on to it for a few days, just to make sure everything is in order.
Wow.
And then he turns to the coffee shop owner and says he's taking a cut for the privilege of holding that money. And maybe, just maybe, the shop will get the rest of the funds by Tuesday.
I mean, in the physical world, that would be completely unacceptable. You would never buy coffee there again.
Exactly.
The owner would likely go out of business from the cash flow disruption alone.
But in the digital world, that guy in the gray suit is just, well, the accepted cost of doing business.
Mm-hmm.
It is the standard operating procedure for almost every traditional online payment gateway. And that is exactly what we are tearing into today. Welcome to this custom-tailored deep dive designed specifically for you.
It's going to be a good one.
Today, we are looking at a stack of merchant testimonials, technical white papers, and e-commerce case studies surrounding a platform called GrineoPay. You can actually find all their documentation at GrineoPay.com. They are a non-custodial crypto payment gateway, and based on the research we have here, they're proposing a rather radical shift in how online businesses handle transactions.
Yeah, they're essentially trying to strip away that gray suit entirely. It represents a fundamental shift in the architecture of online commerce, moving away from a centralized vault system to a decentralized routing system.
Our mission today is to figure out what that actually means in practice. We want to unpack why terms like non-custodial and zero middleman holding matter to a merchant. We're going to slice through the blockchain jargon, look at the actual mechanics of how this software works, and see how it claims to eliminate major e-commerce headaches like high fees, onboarding delays, and chargeback fraud.
Which are huge pain points.
It's huge. Okay, let's unpack this. Because to truly understand why a platform like GrineoPay is disrupting the market, we first have to examine the mechanical flaws in how traditional payment gateways and, honestly, even some of the older crypto processors actually handle a merchant's money.
That is the crucial starting point. When a business uses a traditional gateway, they are using a custodial system. The processor takes actual custody of the funds.
They literally hold the money.
Right. They are the legal holder of that money for a period of time, and this creates a massive bottleneck. Because they hold the money, they assume the liability.
Oh, right.
And that leads to settlement delays, the risk of frozen accounts, and it just introduces an entirely unnecessary layer of counterparty risk. GrineoPay, according to their technical specs, operates on a fully non-custodial flow.
Let's break down non-custodial for the listener. What does that actually look like under the hood when a customer clicks pay on a website? I mean, how does the gateway process a payment if it refuses to touch the money?
So it means the payment is entirely direct-to-wallet and peer-to-peer. When a customer makes a purchase, the cryptocurrency moves directly from the customer's digital wallet across the public blockchain and straight into the merchant's private wallet. GrineoPay's software simply acts as an intelligent monitoring system.
I want to push back on that a bit because it sounds a little like magic.
Sure.
If GrineoPay doesn't touch the funds, how does the e-commerce store know the customer actually paid? Like, how does the store know to release the digital download or ship the physical product?
Think of GrineoPay's API like a highly advanced automated certified mail tracker.
A mail tracker, okay.
Right. The tracker never opens your package, and it never takes ownership of the contents. It simply watches the postal route. In this case, GrineoPay's software is constantly scanning the public blockchain ledger.
Oh, I see.
The moment it sees that a transaction hash matching the customer's payment has successfully landed in the merchant's wallet, the API sends an instant ping back to the merchant's website saying, "Payment confirmed, release the goods." And because there is no middleman holding the funds in a central vault, payouts are effectively instant. As soon as the blockchain confirms the network transaction, the merchant has their money.
So the merchant maintains complete sovereignty over their capital from second one. But wait, what if the merchant loses the private keys to their own wallet? If GrineoPay doesn't hold the funds, they can't exactly reset a password and recover the money for them, can they?
No, they cannot. And that is the trade-off of true financial sovereignty. You become your own bank.
Right.
If a merchant loses their wallet keys, those funds are inaccessible. It requires businesses to adopt robust internal security protocols for their digital assets.
Which makes sense.
Yeah, but for the merchants in these case studies, the benefit of instantaneous cash flow far outweighs the responsibility of securing their own wallet keys. And this brings us to a highly nuanced detail of how those payouts function, which is original coin settlement.
Right, because I know a lot of older crypto processors do not do this.
Yeah.
They act like a currency exchange masquerading as a payment gateway. They force conversions.
Yeah. Exactly. Many older gateways might let the customer pay in Bitcoin, but then the gateway automatically intercepts it, converts it, usually taking a hidden fee or a spread on the exchange rate.
Of course they do.
And settles the merchant in fiat currency or a stablecoin. With GrineoPay, merchants receive the exact cryptocurrency the customer paid with. There are no forced hidden currency swaps.
So it's one-to-one.
Yes. If your customer pays you in Ethereum, your wallet receives Ethereum. If they pay in Solana, you get Solana.
What's fascinating here is how this plays out in real-world operations. Looking at the source material, there is a testimonial from a client, Adrian Veet, who runs Northvale Digital Systems.
Right, I saw that one.
Yeah, he explicitly noted that this original coin settlement gave his finance team unprecedented flexibility. They weren't dealing with payout confusion, hidden spread fees, or unnecessary friction anymore. They get exactly what was sent, down to the decimal.
Which gives a business the power to decide what to do with that specific asset. I mean, maybe they want to hold Bitcoin on their corporate balance sheet as a treasury reserve.
Right. Or maybe they have overseas suppliers who prefer to be paid in Solana.
Exactly. Original coin settlement gives the business the ultimate control.
But hold on, doesn't original coin settlement expose the merchant to massive price volatility? Like, if I sell a $1,000 software license and the customer pays in a volatile asset, that crypto could be worth $900 by the end of the day.
That is a very real concern for standard cryptocurrencies. However, merchants who want to avoid volatility can simply choose to accept stablecoins.
Right.
GrineoPay supports assets like USDT and USDC, which are cryptographically pegged to the US dollar. So a $1,000 software license paid in USDC will settle as exactly 1,000 digital dollars in the merchant's wallet.
Completely immune to the wild price swings of the broader crypto market.
Exactly.
That makes a lot of sense. So if a merchant is holding their own money instantly, and the platform is just acting as a digital tracking number, that sounds great for control. But how does that shift the burden of onboarding? Because usually we submit to grueling underwriting processes precisely because traditional processors are taking on financial risk.
You've hit on the exact consequence of the non-custodial model. By removing the middleman from holding the funds, GrineoPay naturally removes the traditional underwriting bottleneck.
And underwriting is the bane of existence for any new e-commerce venture.
Oh, absolutely.
I mean, if you have ever set up a traditional merchant account, you know the drill. You are sending in business licenses, utility bills, personal bank statements, driver's licenses.
And then you wait.
Yeah. You wait days, sometimes weeks, while a risk department decides if you are deemed acceptable to process payments on their network.
Well, traditional processors have to do that because they custody the funds. If you turn out to be a fraudulent merchant, the processor is on the hook.
Right.
But because GrineoPay never touches the money, their legal liability and risk profile are entirely different. This architectural difference allows them to offer instant merchant approval. According to their documentation, a business can go live in minutes.
Wait, so a business could literally decide they want to accept crypto at 9:00 a.m. and be fully processing global payments by 9:15 a.m.?
Yes, because there are zero bureaucratic hoops to jump through. There is zero KYB Know Your Business required for merchants to get set up.
Wow.
And equally important for stores' conversion rates, there is zero KYC Know Your Customer forced upon the buyers at checkout. GrineoPay does not impose any identity verification flows on the transaction itself.
I have to ask the regulatory question, though. Doesn't zero KYC invite bad actors? How does this not run afoul of anti-money laundering laws?
It is a common misconception, actually. The KYC burden in the crypto ecosystem primarily falls on the exchanges and the on-ramps.
The places where a user converts fiat currency into cryptocurrency.
Exactly. When a user buys Bitcoin on a major exchange, they have already gone through rigorous identity verification. GrineoPay is simply providing the software to route a payment from one established digital wallet to another. They are the communication layer, not the bank.
That distinction is a massive departure from the traditional banking model, especially when you look at the types of industries that constantly face friction from traditional banks.
Very true.
The source material explicitly lists the businesses GrineoPay supports, and it seems to offer an alternative for heavily scrutinized industries. We are talking adult entertainment platforms, CBD and hemp e-commerce, credit repair services, bad credit solutions, collection agencies.
Yeah, these are legitimate businesses that traditional processors routinely block, freeze, or place on rolling reserves.
Right, where they hold like 30% of the merchant's revenue hostage for 6 months.
It certainly changes the landscape of global commerce. When you remove centralized gatekeeping based on internal corporate policies, businesses can operate based on market demand.
Yeah, and Mila C. from Verdanta Wellness Labs, a business operating in that scrutinized CBD space, pointed this out in her review.
Right.
She noted that finding a reliable gateway without being categorized as high risk and charged exorbitant fees was incredibly frustrating. But GrineoPay made their onboarding instant.
And furthermore, she stated their checkout completion rate improved noticeably once customers could pay directly from their own wallets without having to upload a driver's license just to buy a wellness supplement.
So a merchant is instantly approved. They are in full control of their own coins, using stablecoins if they want to avoid volatility, with no hidden currency swaps. The next logical area of concern for any business owner analyzing this platform is going to be costs and risk management.
Let's look at the pricing model first, because it is remarkably straightforward compared to the industry standard. It is a flat 0.5% transaction fee.
Half of 1%.
Half of 1%. There are no hidden costs, no tiered pricing based on processing volume, and no complex monthly gateway fees.
To put that in perspective, traditional credit card processing often runs between 2.9% and 3.5% as a baseline.
At least.
Yeah. Then you add a flat 30 cents per transaction. Then, if your customer's overseas, you get hit with a cross-border fee. Then you pay a monthly fee just to use the gateway software.
It adds up fast.
It really does. If a merchant is selling high-ticket items, say a $2,000 piece of enterprise CRM software, the math on those savings is substantial.
I mean, on a $2,000 sale, a traditional processor might take $60 to $70. GrineoPay would take $10.
Here's where it gets really interesting, because the base fee isn't even the most expensive part of traditional payment processing. The real financial drain, the absolute money pit for online merchants, is dealing with payment disputes and chargebacks.
Oh, yeah. Chargeback fraud is a well-documented epidemic for online merchants. A customer buys something, receives it, and then calls their credit card company and claims they didn't authorize the purchase.
Or that the item never arrived.
Right.
The dreaded friendly fraud.
And the traditional system is structurally skewed against the merchant. In a chargeback dispute, the merchant loses the product, they lose the money from the sale, and the processor hits them with a non-refundable chargeback penalty fee.
Which is usually $20 to $30 on top of everything else.
Exactly. And if a merchant gets too many chargebacks, their processing account gets shut down entirely. It's a catastrophic risk loop that requires businesses to hire entire teams just to manage disputes.
But GrineoPay relies on blockchain mechanics. How does the technology actually alter that chargeback landscape?
It eliminates the mechanism entirely. Because the system relies on wallet-based blockchain confirmations, chargebacks and forced reversals are cryptographically impossible.
Impossible.
Once a transaction is confirmed on a decentralized network like Bitcoin or Ethereum, the ledger is immutable. The math dictates the finality. There is no central authority, no issuing bank, and no gateway administrator that can retroactively reach into the merchant's wallet and yank those funds back.
That's wild.
The absolute protection against chargeback fraud is hard-coded into the very nature of the blockchain.
Okay, I'm going to play devil's advocate here. Complete finality sounds great for the merchant's protection against fraud. But what about a legitimate customer? What if a customer buys a physical product, it arrives broken, and they genuinely deserve a refund? If there is no central authority to force a chargeback, how do refunds work?
That is a critical point. In a non-custodial system, the power and the responsibility shifts entirely back to the merchant. If a customer requests a legitimate refund, the merchant must manually initiate a new transaction from their own wallet, sending the funds back to the customer's wallet.
GrineoPay cannot do it for them.
No, they can't touch the funds. It requires a mindset shift. The merchant has to handle customer service and dispute resolution directly, rather than outsourcing it to a credit card company.
Which means businesses have to actually stand behind their customer service, rather than relying on a bank to arbitrate.
If we connect this to the bigger picture, this fundamentally changes the operational focus of a company. Nina S. from Bluecrest Media Group touched on this extensively in the sources.
Oh, right. I remember her review.
She stated they actively sought a payment option without the endless dispute problems of traditional processors. After integrating GrineoPay, she noted that unauthorized payment issues dropped to zero.
Zero.
Her team now spends far less time dealing with payment holds and manual dispute documentation. When a business doesn't have to dedicate staff just to fighting friendly fraud, they can redirect that human capital into actually improving the product and scaling the business.
So the back-end architecture for the merchant offers clear technical advantages. Low fees, instant access to capital, and cryptographic finality. But a flawless back-end is completely useless if the front-end checkout experience is so clunky it scares the customer away. Crypto interfaces can be incredibly intimidating. We need to look at how GrineoPay bridges the gap between complex blockchain hashes and everyday e-commerce. How does this actually look to a consumer trying to buy a pair of shoes online?
This is where the technical execution has to meet consumer psychology. They haven't just built a robust API. They have designed a highly optimized front end to prevent cart abandonment. On desktop platforms, they utilize a branded, hosted modal checkout.
A modal, for anyone unfamiliar with web design, that means a window that pops up directly over the website the user is already on, right?
Correct. It keeps the customer on the merchant's domain. One of the biggest conversion killers in e-commerce is bouncing a customer away from a beautifully designed store to an unfamiliar third-party URL to complete a payment.
It breaks trust and loses session data.
Exactly. GrineoPay's modal keeps the journey consistent. The merchant can customize the logos and the color schemes so the payment window feels native to their specific brand.
And what about mobile? Because a significant portion of global e-commerce happens on smartphones, you aren't going to get a customer to manually copy and paste a 34-character blockchain address between apps on their phone.
No, that would be a nightmare, which is why they have built a mobile-first QR code and deep linking experience.
Break down deep linking for us. What does that mean for the user?
When a customer is shopping on their phone and clicks pay with crypto, GrineoPay software doesn't just show them an address. It deep links, meaning it communicates directly with the operating system to seamlessly open whatever non-custodial crypto wallet the user already has installed on their device.
Oh, so it skips the copy-paste entirely.
Completely. It automatically populates the exact amount and the destination address into apps like MetaMask, Trust Wallet, Phantom, or Exodus. The user simply authenticates with their Face ID or thumbprint, and the transaction is sent.
That is smooth.
It really is. For security-focused buyers, it also interacts smoothly with hardware wallets like Ledger. The handoff from the merchant store to the secure, wallet-native payment flow is incredibly fast.
And the documentation notes they support a wide variety of assets. Right. It is not just a Bitcoin gateway.
They support over a dozen major cryptocurrencies. You have the heavyweights like Bitcoin and Ethereum, but also high-speed, low-cost networks like Solana and Tron, which are vital for microtransactions.
And we already mentioned the stablecoins like USDT and USDC for avoiding volatility.
Right. But they also support privacy coins like Monero, alongside Litecoin, Dogecoin, and Cardano. It gives the consumer options based on what assets they actually hold.
From a technical integration standpoint, it seems highly versatile. Like, a business doesn't even necessarily need a full-blown e-commerce website to utilize the routing software.
That is correct. Through the GrineoPay merchant dashboard, a business can generate reusable hosted payment links.
Oh, that's handy.
It's a very practical tool for consultants, freelancers, or B2B service providers. You simply generate a specific link, drop it in an email or a messaging app like Telegram or WhatsApp, and the client clicks it to pay the invoice directly from their crypto wallet. No complex storefront required.
But if a business does have a complex storefront, how difficult is the integration? If I am a developer building a custom marketplace, I need to know how this connects to my database.
For custom builds, they provide developer-friendly REST APIs. In software terms, a REST API is a set of standardized rules that allows the merchant's web server to easily talk to GrineoPay's servers to request payment status updates in real time.
And the sources indicate the API documentation is crystal clear.
Very clear. For merchants using out-of-the-box platforms, they offer plug-and-play integrations for WooCommerce, Shopify, Magento, BigCommerce, PrestaShop. The list in the source material covers over 20 different major e-commerce platforms.
I noticed in the developer reviews, Owen J. from Pivotal Stack Technologies mentioned that his team had the full API integration live within hours. He noted that the architecture felt built for real merchants instead of being an afterthought. When a developer praises the documentation, that usually means the underlying code is remarkably clean.
It speaks to the intent behind the architecture. They are trying to build a gateway that respects the developer's time during integration, respects the merchant's capital by not holding it hostage, and respects the customer's experience by keeping the interface clean.
So what does this all mean? If you synthesize everything we've pulled from these case studies and technical papers, it points to a significant reduction in the friction of international digital commerce. The traditional model of waiting days for wire transfers to clear or praying a cross-border credit card transaction doesn't trigger an arbitrary fraud alert is being actively challenged.
It is an attempt to realize what digital currency was always theorized to be: fast, borderless, and peer-to-peer, but packaged in a user interface that modern businesses can actually plug in and use today without needing a degree in cryptography.
Let's do a quick wrap-up to bring all these technical threads together for you, the listener. Based on the materials we've analyzed, GrineoPay, which you can explore for yourself at GrineoPay.com, is aiming to redefine crypto acceptance for online businesses.
It really is a comprehensive solution.
By utilizing a fully non-custodial direct-to-wallet flow, they ensure merchants receive instant payouts without a middleman holding the funds. They utilize original coin settlement, preventing hidden conversion spreads. They operate on a flat 0.5% transaction fee.
Which is massive for margins.
By removing themselves from custody, they eliminate the need for grueling underwriting, offering zero KYC and zero KYB setups that can go live in minutes. And they facilitate all of this through a branded chargeback-free checkout experience across desktop and mobile, supporting a wide range of assets, including stablecoins.
It is a model designed to make accepting cryptocurrency a strategic operational advantage, rather than a technical or regulatory burden.
If the claims in these sources hold true, it is a highly compelling proposition for businesses tired of the traditional payment model. You can read their documentation, review the API, and explore setting up a dashboard at GrineoPay.com.
You know, breaking down the mechanics of this non-custodial system leaves me with a much broader question to ponder.
Okay, let's hear it.
We have seen how a platform can operate purely as a fast, secure facilitator of code routing payments seamlessly and confirming transactions via API rather than acting as a vault that hoards your funds and dictates your business terms.
Right, proving that the guy in the gray suit isn't actually necessary for the transaction to occur securely.
Precisely. So the lingering question is this: as this direct-to-wallet, non-custodial philosophy proves its efficiency and becomes a preferred standard for merchants who demand absolute control over their cash flow, how might this eventually force traditional banks, credit card networks, and middleman-heavy industries to completely rewrite their legacy business models just to survive the next decade of digital commerce?
That is a massive operational thought to chew on, because once merchants experience the reality of holding their own keys and securing their own capital instantly, they might not be so willing to hand their wallets back to the traditional gatekeepers anytime soon. Thank you for joining us on this deep dive. Till next time.